Continue part 5 of sample solutions plus 2 accountancy. The question number 25. Abhay and Baldwin are partners sharing profits in the ratio 3:1. On 31st March 2021, firm's net profit is 1,25,000. The partnership deed provided interest on capital to Abhay and Baldwin rupees 15,000 and 10,000 respectively, and interest on drawings for the year amounted to rupees 6,000 from Abhay and 4,000 from Baldwin. Abhay is entitled to commission at 10% on net divisible profits. Calculate profit transfer to the partner's capital account. Let's draw profit and loss appropriation account. Profit and loss appropriation account. The first entry we have to transfer to the P&L appropriation is by net profit. The net profit is given in the question itself 1,25,000. And then interest on capital 15,000 and 10,000 to Abhay and Baldwin respectively. So interest on capital Abhay and then Baldwin. So how much? 15,000 and then 10,000, so 25,000 total interest. And then there is an interest on drawings from Abhay by interest on drawings. It is a income. Abhay and then Baldwin. Abhay and then 6,000 rupees Abhay and 4,000 rupees from Baldwin. So 10,000 rupees. So we have to find out the net divisible profit. Net divisible profit, how to find out it? So we have to total the credit side of the profit and loss appropriation account 1,35,000. So 1,35,000 minus 15,000, 25,000, that is 1,10,000 is the divisible profit. So commission is to be given. So after commission, that is 10 divided by 100 plus 10. So 110. So if you simplify, that is 10,000 rupees. 10,000 rupees is the commission. So commission 10,000 rupees. Now we can balance. So 1,35,000 minus 25,000 minus 25,000, 10,000. So 35,000. So 1 lakh. So this is a profit. Profit transferred to partner's capital account. This must be the answer. Is their answer is given in, the A is 1 lakh, B is 1,10,000, C is 1,07,000, D is 90,000. So A is the correct answer. Question number 26. Given below are two statements. Assets in revaluation account is prepared at the time of admission of a partner. It is true. It's correct. And then reason. It is prepared to adjust the value of assets and liabilities at the time of admission of a partner so that the true financial position of the firm is reflected. Yes, exactly correct. In order to produce, in order to disclose the true financial position of the firm, it is to be prepared. So both are correct and the reason also correct. So code, both A and R are correct and R is the correct reason of A. That's correct. The next one is both A and R correct, but R is not the correct answer. Correct reason of A, it's wrong. Only R is correct and both A and R wrong. So answer is A. Both A and R correct and R is the correct reason of A. Question number 27. Upper Limited forfeited 4,000 shares of rupees 20 each. Fully called up. That means the total face value has been called up, on which only application money received. Out of these, 2,000 shares were reissued. First of all, we understand the share forfeiture amount. How much the share forfeiture amount? Actually, the share value is rupees 20. But the first, the application money has been received. Application money rupees 6. So the 14 rupees would be for non-payment of allotment and first and final call. First and final call. 4,000 shares have been forfeited. Understand? Out of these, 2,000 shares were reissued and rupees 8,000 has been transferred to capital reserve. What is the formula for capital reserve? Capital reserve formula, capital reserve equal to total amount of, share forfeiture, amount of share forfeiture, number of shares forfeited divided by number of shares forfeited into number of shares reissued minus discount on reissue. This is a formula, please remember, discount on reissue. So capital reserve is given. Capital reserve, how much it is given? 8,000 rupees is given. So 8,000 equal to amount of share forfeiture, only application money received for 4,000 shares. So 4,000 into how much? 6 rupees. That is 24,000 amount of forfeiture. Number of shares forfeited, 4,000 forfeited. So divided by 4,000 into number of shares reissued. Out of 4,000 shares, only 2,000 shares reissued. So into 2,000. And then discount on reissue. It is not given in the question. We have to find it out. So you can let it X. So what is the value of X? For example, the 2000 divided by 3030, 2 times. So here 12,000 rupees. So 8,000 equal to 12,000 minus X. For example, keep it 12,000 right hand side, and then X, if it comes, it will become positive, and then 8,000 if it go that side, it will minus 8,000. So 4,000 rupees. So 4,000 rupees is X, discount. For example, if it is issued on discount, how much of discount? The question is calculate the rate at which the shares were reissued. So total discount 4,000 rupees. Number of shares reissued is 2,000 shares. So discount on per share is 2 rupees. The face value of rupees 20. So the discount is 2 rupees. So it must be, the new issue of shares, reissue of shares at the rate of 18 rupees. 20 minus 2, 18 rupees. Is the answer is given in the question? 20 rupees per share, 18 rupees per share. So it is a correct answer. So B is the correct answer. The next one is question number 28. Which of the following statement is true? Authorized capital less than issued capital. First of all, we should know authorized capital. Authorized capital means it must be authorized. It is a licensed capital. The maximum capital that we can mobilize from the public, that is authorized capital. Out of that, one particular portion can be issued. So it will not be less than, authorized capital will never be less than the issued capital. So it is not a correct answer. And then authorized capital greater than issued capital. Yes, it is a portion of authorized capital may be issued to the public. So it's correct. And then subscribed capital, out of issued capital, certain portion will be subscribed by the public. So subscribed capital less than or equal to issued capital, that is also correct. And then subscribed capital greater than issued capital, definitely it will not, because it is a portion, actually issued capital more than subscribed capital, so it's wrong. So the two statements are correct, second and third. The code is where it is available, actually second and third, answer C is the correct answer. Second and third is the correct answer. Question number 29. Mickey, Tom and Jerry were partners in the ratio of 5:3:2. On 31st March 2021, their books reflected a net profit of rupees 2,10,000. As per the terms of the partnership deed, they were entitled for interest on capital which amounted to rupees 80,000, 60,000 and 40,000 respectively. But the capital account is not given, that interest on capital is given. Besides a salary of rupees 60,000, each was payable, Mickey and Tom. There is no salary to Jerry. So they calculate the ratio in which the profits would be appropriated. So as the capital is not given, we can start from the interest on capital. Actually, interest on capital, both Mickey and then Tom, Jerry. So interest on capital, the amount is given, that means 80,000 rupees, and then 60,000 rupees, for Tom 60,000 rupees, and then Jerry 40,000 rupees. And then add, interest besides this salary. Salary how much? 60,000 each payable to Mickey and Tom. There is no salary to Jerry. So 60,000 rupees. 60,000 and then 60,000 again nil. So if we add 1,40,000, total capital will be, because the interest on capital and salary will be added to the capital account. Here the opening capital account is not given, so we shall leave it. Now that capital account will be 1,40,000 here 60 plus 60, 1,20,000, here 40,000. Understand? So what will be the ratio? In that ratio the profit will be shared. So here 40 you can delete, and then 40 you can delete, and then 40 you can delete. So 14:12:4. Further we can divide by 2. If we divide by 2, 7:6:2. 2, 6 and then 2. So this is the ratio. This is a new ratio on which the profit will be shared. Is there given in the question? Well, it is given A 1:1, 1:1, and then B 5:3:2, C 7:6:2. That is the correct answer. So C is the correct answer. Understand?